Yeah, so I think of the trade situation as a risk to the outlook. You're right, it can have multiple effects on both sides of our mandate. I think there's a lot of rhetoric, and ultimately how the U.S. economy performs, it's going to matter what actions are actually taken. So the uncertainty around it is certainly a factor that we need to be keeping tabs on. We're getting some anecdotal reports that perhaps some firms are taking a little bit of a wait-and-see attitude, but overall, I would say the firms that we spoke to are watching it but haven't changed their behavior as a result of it.
How would you say the balance of risks are in this environment? Would you say there's more potential for upside risk to materialize, or are you conscious of downside risks?
I think we're in a pretty balance of risk. There are upside risks, and certainly upside risks for the first time in quite a while because of the fiscal policy changes that we've had and the fact that the economy is quite strong and monetary and financial conditions are still accommodated. On the other hand, there are some geopolitical risks, and the trade rhetoric adds some uncertainty to the outlook, which is a downside risk.
Now, one other statement that popped out of the FOMC minutes was the introduction of the word symmetry around inflation. Can you talk me through why the Fed decided to introduce that word or reintroduce that word into the statement again?
Right. So it's actually not a new word in the sense that it's in our longer run strategy document that we agree to at the beginning of each year or reaffirm at the beginning of each year. And I think it's just a reminder to the public that, you know, we do take a balanced approach when we're looking at our inflation target. So if we were, you know, above the target or below the target for sustained time, that is something that concerns the FOMC, whether we're on the upside of inflation or the downside of inflation. And I think we've shown that since the Great Recession that we were concerned with inflation being too low. We also want people to know that we care about inflation going above our target for a sustained period of time. That would concern us as well. And we just want to remind people that inflation, when we're thinking about the inflation target, it's symmetric. That 2% is not a ceiling. You know, inflation might go above 2% for a little bit, below 2% for a little bit, but we're always aiming for 2% as our goal. And so it's just it's basically just a reminder to people that we are looking for 2% on a sustained basis, and it's a symmetric goal.
Some people have taken that as a dovish interpretation, in the sense that the Fed might be preparing the market for inflation to overshoot in coming months due to base effects, transitory effects, and therefore the market should not read too much into it if inflation does overshoot that 2%.
So I do think that the near-term readings could go a little bit above 2% just because we know that some of the last March's readings are falling out, and so that puts upward pressure, and there's some commodity price increases. On the other hand, I don't think they're going to last. So again, right, we don't really want transitory movements to be influencing, you know, our view of where we are relative to our goal. We have to look through those transitory movements, and we have to always be focused on 2% over the median run on a sustained basis. And I think adding that to the statement made perfect sense in the sense that we're always trying to be transparent, and I think of that as being transparent about how we're thinking about inflation.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.